Hello and welcome to Unacademy, a one-stop destination for all the English medium civil service aspirants. Welcome to another session of Economic Weekly Recap, wherein we take up all the important economy-related articles which appear in different newspapers and analyze these articles. And in this video, this is the list of the 6 articles that we'll be analyzing. Now, before we start the discussion, a very important announcement. I'm pretty sure all of you know by now, we have launched Conquer Prelims 2024 initiative for the upcoming civil services preliminary examination. There are 2 components to this. One is the static based discussion, that is MCQ based discussion for the static portion that will be taken on the platform, and today's class will be taken by Chetan sir. Please do join live at 6 p.m. And some of the students will basically say, sir, what about the classes that we have missed out? All you need to do is go to the respective faculty's profile. Under the special classes section, you will be able to see all the classes which are already over. And second, today join me live at 7:30 p.m. on the YouTube channel, where we'll be starting with the first session of Conquer Prelims Current Affairs Initiative for Indian Economy. With this particular caveat, let me start the discussion. But before I start, there are many students who have written a mail to me, commented below the videos asking for PPT, asking for the gist or the PDF of the articles that I'm discussing. These will be made available in the Telegram channel. If you have not yet joined the Telegram channel, here is the QR code. Kindly scan it. You'll be able to join our Telegram channel. Whatever PPTs we are using or the summation of the articles that I'm discussing will be made available in the Telegram channel. Now let's start with the discussion of the first article. Grow moves base to India as it sees flip side of staying abroad. Now there are 2 concepts which have become very famous in recent times, to the extent that even the economic survey had a discussion regarding that. The concept is flipping and reverse flipping. Flip versus reverse flip. Now what is this concept of a flipping and a reverse flipping? Let's start with a basic idea. Imagine a company is established in India, and this company will have certain operations, manufacturing, sales, revenue sources, etc. in India. Now over a period of time, this company will open a subsidiary, one more entity owned by itself outside India. Let's say they will open this subsidiary or another entity in Singapore. So I'll repeat it, an Indian company which is operating, which has revenue sources in India, will open one more company, its entity in Singapore, and slowly and steadily will transfer all of its asset from the Indian company to the Singapore entity. I hope you are able to understand this. The assets will be transferred, intellectual property rights would be transferred, and slowly and steadily what will happen is this Indian company will be sold to another entity, that is its own entity in the Singapore, and this Indian company will end up becoming a subsidiary of this Singapore company. This is basically called as flipping. Is it okay? This is called as flipping process. Now many of you ask me, sir, why? Why are the companies flipping like this? Is there any logic to that? The reasons which are generally cited for flipping of these companies are, first one, generally there is an assumption. There is an assumption that in the foreign market, the valuation of the companies would be very, very high or much better than what they will be valued in terms of Indian market. And to have a better valuation, so that in the future, when they will go for an IPO, when they will get listed or go public, so that they'll be able to raise a lot of capital, they will go for flipping of the companies. Second one, many of the investors, let's say venture capital investors, who have invested in this company, they will demand or they will ask the company to change the domicile. There is a technical term now, please understand. They will ask for the change in the domicile. What do you mean by domicile? Domicile essentially means the country in which you have the headquarters located. I'll repeat it. What do you mean by domicile? It is the country or in the region or in the territory where you have located your headquarters. So this company, which was originally an Indian company, will change its headquarters, will shift its headquarters to Singapore, or for that matter USA, etc. In essence, they have changed their domicile, and once they change their domicile, this is basically the concept of flipping. So second point here, why do they go for flipping? It is one of the demand of the investors, or one of the demands of venture capitalists. Third reason, some of the companies will go for flipping for a very simple reason, that their market might be majorly outside India. Over a period of time, they will realize that majority of their market, majority of their revenue, they're able to generate from another market, not Indian market. So in order to become much more nearer to their market or major market, they will also go for flipping. These are some of the reasons why generally the companies or the startups flip. Now in recent times, it has been observed that because of the policies of Government of India, because of certain changes announced by Government of India, there is a rising trend of reverse flipping. What is this reverse flipping in essence? The company which had changed its domicile to Singapore now again will change its domicile back to India. In a nutshell, the headquarters of the company will be again shifted back to India. This is basically called as reverse flip. Now, what are the reasons? Why are the companies, increasingly more and more startups or the companies are opting for reverse flipping? Are there any reasons behind it? Point number one, as already mentioned, Government of India in recent times has taken various reforms, has been promoting the growth of startups in India. And this growth of the startups has been attractive for the foreign companies, or let's say these Fintex which had actually gone for flip earlier. Second reason, one of the reasons why they shifted their headquarters, why they changed the domicile, was for valuation, better valuation. Now they are able to see that in Indian market, there is a very well startup ecosystem that has originated. The startup system is growing, and there's a lot of investments that is entering into startups. Especially the participation of venture capitalists in India is actually rising. Now looking at the kind of valuation that Indian companies are able to get domiciled in India, these companies which have earlier flipped feel that there is a better valuation possible even by having a domicile in India. That is also one reason why the companies are going for reverse flip. The third reason, the venture capitalist activity has increased. Fourth reason, even the retail market participation, that is the investments which are done by, let's say, individuals, that also has increased. For example, the number of demat accounts which have been opened in recent times, it is increasing by a very fast pace, and it generally means there is a lot of investor participation, lot of interest of the investors in the market, and that basically will satisfy the IPOs, or basically the rising investor participation will help many companies to conduct IPOs, and various fintechs are targeting to go for an IPO. So these are some of the very important reasons why the companies which had earlier flipped are going for reverse flipping. But Government of India, the minister clearly stated that any company which will opt for reverse flipping, we will allow it. We will allow these companies to return or have their domicile back in India. But in the process, there will be certain taxes applicable. Certain taxes will be imposed on them, because they will have to change the structure of the organization. They will have to basically go for shift of the organization. Certain taxes are applicable. They will have to pay those taxes. In fact, last year, there was a committee which was set up which has given recommendations to promote the concept of reverse flipping. Now here is your first assignment. What is the name of the committee? Who was the head of the committee to study to promote reverse flipping into India? What is the answer? Let me know in the comment section. So these are the things. One more company, the latest company to go for reverse flipping is Grow. Now beyond this, what is the valuation of grow? How much taxes they are going to pay? How much taxes phone pay will pay? You do not worry about it. That is irrelevant for the civil services examination. Now based on this, I have given a question. Which of the following are the outcomes of flipping? Which of the following are the implications of flipping in India? Now please understand this. Whenever a company in India will change its domicile to, let's say, USA, will change its domicile to, let's say, Singapore, there are reasons behind it. For example, I told you the demand of investors could be one of them. Better valuations could be one of them. Tax incentives could be one of them. But once the flipping happens, what are the implications? What is the impact of that in India? First one, higher tax collections by the Indian government. Just think of it. If a company will change its domicile to, let's say, Singapore, how it will help government of India to raise more taxes, collect more taxes? It will not help. It will actually have an impact on the amount of taxes that the government is actually collecting. So it will not increase the amount of taxes collected. Loss of IPRs, definitely yes. In fact, I told you in the process of flipping, once the company is established in, let's say, Singapore, all the assets of Indian company will be transferred under the ownership of Singapore company. IPRs, intellectual property rights, will also be transferred. So there will be a loss of IPRs. IPRs will be shifted from ownership of an Indian company into ownership of a USA company, or let's say a Singapore company. So loss of IPRs, yes. And what about the brain drain? That is, when the headquarters is shifted, the managerial level, that is the people who are at the highest level of management, they will also shift their residence. Rather than residing in India, they might also move to Singapore or USA if the flip has happened to USA. So will there be a brain drain? Yes, there will be, of course, a brain drain. Choose the correct option. How many of them are the outcomes? Right option will be option B here. Let me go to the next article. Central lifts export ban on onion, but conditions apply. Now what is the discussion all about? Should you focus only on the onion, or there is a larger picture that you need to look at? Let's have a discussion regarding this. Government of India, in the last couple of years, in order to address the issue of domestic inflation, I repeat, in order to address the issue of domestic inflation, has taken various measures. And one such measure was to basically impose a restriction initially in terms of, let's say, quotas, and over a period of time banning the export of various agriculture commodities such as onion. Now, Government of India now says, according to the latest notification, there is sufficient onion production in the domestic market that we are expecting in the upcoming Rabi season, and that is the precise reason there is no need to have any kind of a ban on the onion export. So we will remove whatever onion export ban that we had imposed at the end of the last calendar year. But let's go beyond this. Government says we are allowing the exports, but we also want to ensure that cheaper exports will not be going out of India. And how do we ensure cheaper exports will not go out of India? By imposing minimum export price, MEP, along with a tariff. Along with the tariffs, you will have to ensure that cheaper exports of these onion products or agriculture commodities will not be made. And accordingly, if you look at the data, government has imposed a minimum export price of $550 per ton and a 40% tariff above and over the $550, which essentially will take the prices to $770 per ton. And if you just convert this into rupee terms, the exporter will now be allowed to export onion, but not at a price below around 64 rupees per kg. Is it going to promote more and more exports from India? Various experts do not agree to this point. They basically say that if you look at the price of onion, that is the export prices, it will be around 64 rupees. In the international market, very recently, the prices of the onions have started moderating for a very simple reason. Earlier, countries such as Egypt, countries such as Pakistan, they also had imposed export bans. Now they have removed these export ban restrictions, and the exports from these countries has increased the global supply, and the prices have started moderating. And as a result of this, whatever you are going to export now, these will not be having very high competitiveness in the international market. But many of the farmers have also criticized this policy of Government of India. Why? Before this was announced, there was one more policy under which Government of India allowed red onion to be exported from certain part of India, certain state of India. And many of the farmers from other states such as Maharashtra criticized the Government of India and stated that why is this kind of a favorable policy, favoritism being followed by Government of India. So these are certain important points. But please understand at a larger picture, what you need to look at is what about agriculture export policy? What about agriculture export policy of India? Is there a need to have a consolidated agriculture export policy? Because generally what we are seeing is government, again this is a viewpoint of many of the experts, they argue that government generally provides a knee-jerk reaction. What do you mean by knee-jerk reaction? Without any forward thought, based on the situation right now, suddenly the policies of the government are changed. Sometimes government will allow promotion of exports because there is too much of supply in the domestic market. And immediately after that, maybe 3 months, 4 months, 5 months after that, suddenly Government of India will change the policy, ban the export or limit the exports of the same commodity. Many experts argue this is not the right way to approach, let's say, the exports. And in fact, if you look at the agriculture exports, Government of India had a target of achieving $60 billion. I repeat, $60 billion worth of it by 2022. And the latest data says it is somewhere around $48 billion to $50 billion. In fact, compared to last year, this year the agriculture exports have actually declined. And within that only, the highest amount of agriculture exports is accounted for cereals, rice, wheat, etc. And in recent times, Government of India, in order to protect the domestic inflation rate, in order to protect the domestic market from higher inflation rate, has imposed a restriction on even these exports. So what is the critical evaluation? Is this kind of a policy required? What is the issue regarding that? Let's try and understand. Point number one, whenever you look at these kind of policies, that is, let's say government will impose restriction on exports, what is the impact of it? First one, the exports from India would be coming down. Straightforward point. The exports, value of exports will be affected. And as a result of the value of exports coming down, the amount of dollars which will flow into India will also flow down or go down. First impact. Second impact, the earnings of the farmers. This is very, very important. The earnings of the farmers will also be affected. You would be wondering, sir, how? How by imposing these kind of export bans or restrictions, how are the farmers' earnings affected? Let's take an example. The onion price, let's say in the international market, is around 70 rupees per kg. Just a hypothetical example. In India, the domestic market is, let's say, around 20 rupees per kg. So farmer has a huge incentive to export this product to the international market and earn additional revenue of 50 rupees. But if the Government of India imposes restrictions in the form of, let's say, export bans or in the form of quotas in terms of exports, etc., the farmers' earnings would be limited. Farmers' earnings would be affected. And that has been the biggest criticism against such a policy of Government of India. Third, what about investments? What about investments? So what kind of investments are you talking about? If Government of India every now and then, every often will keep on changing this policy like this, allowing exports or restricting exports, banning exports, etc., investments in warehousing, investments in transportation, investments in other type of infrastructure from the private sector, there will be certain concern. Because as a private sector investment, I want, or an investor, I want certainty in the policy. I do not like volatility in the policy making. I would prefer there is certainty in the policy making. That is also a concern. But no doubt, fourth impact of such policy will be government will be able to control domestic inflation rate. The government will be able to control inflation rate in the domestic market by imposing restrictions on the exports or by banning exports. Supply in the domestic market will be sufficient, continuous supply will be observed, and continuous supply means the prices will be stabilized. So these are certain very important points regarding what is the impact of policy making of Government of India in terms of, let's say, agriculture exports. Now, based on this only, I have given a question here. To address food inflation in India, there is a need for the government to shift from protectionist policy to calibrated trade policy. Now, many of you will ask me, sir, what do you mean by protectionist policy? Very simple. Government of India in the last couple of years, as already mentioned, has imposed restrictions over exports. And when Government of India imposes such restrictions, and India being a major exporter of agriculture commodities, this is nothing but a protectionist policy. In fact, the same was discussed in the WTO's ministerial conference, earlier ministerial conference, where various other countries approached Government of India, requested Government of India to withdraw, to basically not have such kind of policies where they will be stopping exports of agriculture commodities. So no doubt it is a protectionist policy, to protect the domestic market. And one more point here is, it also can be referred as a kind of a protectionism, because these kind of policies always focus on protecting the interest of the customers. I as a customer, I should not be affected by rising onion prices. Government will ban onion exports. I as a customer should not be affected by rising wheat prices. Government will stop wheat exports from India. So the counterpoint to this, various farmers argue, saying that why are these policies always focused to protect the interest of the customers? When will the government have policies to protect us? Even forget about protecting. Why not simply allow the market forces to determine everything? According to the market forces, I'll be able to earn more by exporting more. Allow me to export. Right? So that is the reason these are basically protectionist policies. To calibrated trade policy, in order to ensure that these kind of knee-jerk reactions are not given by the government, what kind of policy we must be having. Same thing I've discussed. You can use it to write an answer here. The next article. RBI is asking Fintex not to pursue blistering growth. What is the issue all about? Listen to me very carefully. There are a lot of fintech companies in India which are involved in giving loans. Point number one. And point number two, RBI in recent times has been worried, has been concerned about the very high pace of growth of loans for retail borrowers. In fact, in the last couple of months, various reforms have been taken by Reserve Bank of India. For example, I'm pretty sure all of you heard of this, Reserve Bank of India, in order to ensure that the pace of growth of loans to retail borrowers, especially unsecured loans, will be controlled, increase the risk weightage of various assets, RWA. Increase the risk weightage that is allocated to various loans that are given. For example, credit cards. The risk weightage for the credit card loans has been increased by RBI. The loans which are given by the banks to NBFCs, there is also risk involved. NBFCs will use the loan to lend to borrowers in the market. The RWA has been increased. And the logic of RBI was that if I increase the RWA, risk-weighted assets, if I increase the risk to these assets, automatically the banks will have to keep more capital to protect themselves. And if the banks are keeping more of capital, the loans would be becoming costlier. That was the original intention. With the loans becoming costlier, automatically the flow of loans to unsecured loans, to the retail borrowers, etc., would be coming down. That was one reform. Second very important reform, RBI has increased the repo rate. During pandemic, RBI reduced the repo rate. But after that, RBI has increased the repo rate. That is specifically between May 2022 to April 2023, till last year, RBI has actually kept on increasing repo rates. And the objective was to basically again increase repo rate In fact, the repo rates overall were increased by 250 basis points. With the increase in the repo rate, the rate of interest on the loans would increase. And when the rate of interest on the loans increases, these loans will become costlier, borrowers would come down. So RBI in the recent times has increased the RWA, has increased repo rate. What has been the impact? RBI expected loans which are given to retail borrowers, unsecured loans, etc. would come down. But out of the total loans issued by the banking sector as well as the Fintex now, the loans which are issued to the borrowers are one of the highest. Specifically, the unsecured borrowers, retail borrowers. And RBI is not liking this even a single bit. RBI simply says these are very risky loans. The banks are taking very high amount of risk. Fintechs are taking very high amount of risk. And to address this particular issue itself, RBI has spoken to the leaders of Fintex, the CEOs of the fintech companies. And what has RBI told them? Do not target very high growth rate. Please do not target very high growth rate, because it has been found that many of these fintechs have experienced a growth rate, or let's say growth in terms of lending, in the range of 35% to 40%. So RBI simply says, do not target very high amount of a growth, because you are having a very high amount of growth already. Rather than that, do not be very ambitious and simply target a growth rate of 15 to 20%. That's more than sufficient. So RBI has simply asked them to tone down. RBI has told them, control the kind of activities, that is lending activities you are doing, specifically for retail borrowers, unsecured borrowers. Now, what is the issue all about? What is the issue with this kind of a directive? The fintechs are in a difficult situation now. They are in a dilemma. What is the dilemma? On one side, they have been able to attract a lot of investments, showing their balance sheet, which shows that they are experiencing a very high growth rate. So they have attracted a lot of investments. Now, to satisfy those investors, they will have to target more, they will have to grow more, generate more revenues, so that the investor is satisfied. And on the other side, here is the regulator, Reserve Bank of India, which says control, tone down the kind of loans you are giving, control it, do not target very high amount of a growth. So they are in a difficult situation. They do not know what to do now. That is point number one. Point number two, many of the fintechs are basically arguing, we should not be asked to do this. RBI should not be telling this to us. Why? We are, of course, we have a duty towards our investors, and over a period of time, what are we targeting? What are we trying to do? We want to increase our business, right? Increase our revenue, and over a period of time, show all of these financials, go for IPO. That is our target. So if we tone down our targets, automatically our revenues would be affected. And if our revenues are affected, our IPO dreams will be pushed backwards by a couple of years now. So these are some of the things that have been raised or that have been discussed as well as raised by Reserve Bank of India as well as the fintech companies. Now, next article, Government of India may mandate use of green steel for making luxury cars. What is the issue all about? Point number one, the steel sector in India contributes around 12% of greenhouse gas emissions. The steel sector in India contributes around 12% of greenhouse gas emissions. Very, very high. On the other hand, Government of India says, we want to target neutrality. That is, net emissions should be neutral going forward. We have set up a target of zero emissions by 2070. And one of the ways to achieve that, or one of the reforms that we need to implement to achieve that, is to ensure emissions in the steel sector will come down. The contribution is very high, emissions are very high. We need to ensure contributions will come down. And how do we reduce it? Government of India now says, why don't we promote consumption of green steel? Why don't we promote consumption of green steel? Now, many of you will have this kind of a doubt, sir, what is green steel? The color of the steel is not green. Be very careful. The steel which is produced where emissions are very less. The steel which is produced, let's say using certain gases or certain sources of energy where the emissions is very, very less. It is basically called as green steel. In fact, they have discussed all of this. Right? Now, what is the issue all about? What is the issue? Government says, let these particular companies use hydrogen. Right? That is very famous now. Let these companies use hydrogen as a source of fuel and produce green steel. And specifically in what area should we start? Government of India says, why don't we target luxury cars? Production of luxury cars. May not be the complete car which will be manufactured using green steel. At least certain components can be used green steel to manufacture luxury cars. Right? So Government of India is asking this kind of a question. As a counterpoint to this, many manufacturers are saying, having this kind of a green steel is a very good idea. But the cost factor will be very, very high. The cost factor of green steel is very high. For example, many experts have pointed out, if you want to manufacture 1 ton of let's say steel using whatever process we have today, the cost of it will be somewhere around $1 million. The cost of operating this will somewhere be around $1 million. But instead of that, if I use a green steel, then for same production capacity annually, I will have to spend somewhere around $2 million to $2.25 million. $2 million to $2.25 million. Very, very costly compared to whatever procedure we are using today. So what about the cost factor? Right, so that is the concern which has been raised. And another concern is, many of the manufacturers saying they are saying there is no incentive for us. What is the incentive? Why should I simply shift from manufacturing or using a normal process to, let's say, production of green steel? What is the incentive for me? And that was discussed very recently. Now, understand this. It is said that there is a proposal. There is a proposal which is being considered by the government, where Government of India is simply considering, can we incentivize production of green steel? Can we incentivize? How so? There is a proposal wherein Government of India says we can reduce the cost of the capital. That is, when these companies will take a loan, we can cut down, we can ensure they'll be able to get the loans at lower rate of interest. But many of the experts have said that will not be sufficient. That will not be sufficient because the cost of production of green steel is comparatively much higher. This kind of an incentive will not suffice whatever is the excess expenditure. But again, the argument is, today it is very costly. Today it might be twice the cost, it might incur twice the cost to produce green steel. But if the consumption of this increases, over a period of time, more technology will be introduced, more production will be done, and that will automatically lead to reduction of premium pricing of the green steel. But why is the government talking about introducing green steel in luxury cars to begin with? Why not any other product? Why targeting luxury cars? Please understand this. The argument behind that is, luxury cars are not price sensitive. I'll repeat the statement. Luxury cars are not price sensitive. Unlike, let's say, a Maruti car or any normal car such as Alto, etc., where if the price of the cars increases, automatically law of demand will come into picture. If the price of the demand goes up, price of the product goes up because of the green steel, demand will automatically move in opposite direction. But in case of luxury products, these are not so much price sensitive. Why? By the virtue of being luxury products, these are demanded by certain set of people, certain population who does not have any scarcity of resources. And that is what is being used by the government to basically say that, why don't we use the green steel in the manufacturing of luxury cars to begin with? So these are certain very important points regarding the concept of green steel. Now next, shares given as gift may escape capital gains tax. What is the issue all about? There is a discussion which has been happening regarding the concept of gifting shares in recent times. For example, couple of months ago, Mr. Narayan Murthy transferred or gifted 0.04% of shares that he had to his grandson. right? The value of the shares at that point of time. At that point of time, the value of these 0.04% of Infosys shares came out to be around 250 crore rupees. And that generated lot of discussion, lot of debate. Now, but altogether for a different reason. But talk about this is very simple here. Concept is very simple. Whenever the shares are transferred, when the shares are gifted like this, transferred in the sense I'm talking about gifting here, is the capital gains tax applicable in the first place? Listen to me carefully. Whenever the shares are gifted by a relative, whenever the shares are gifted by a relative, taxes are not applicable. Whenever these are transferred by a non-relative, whenever these are gifted by a non-relative and the price is above, that is consideration is more than 50,000 rupees, then the taxes are applicable. Taxes are applicable. Now this is what is being discussed by Bombay High Court. What has the Bombay High Court stated? The Bombay High Court has stated that whenever the shares are gifted like this, gift means there is no consideration for it. Consideration in the sense, if I give a gift to you, hypothetically, if I give a gift to you, I am not expecting anything in return. There is no consideration, it is not an exchange, it's a gift. So without having a consideration, where is a question of gains here? There is no concept of gains. Now without gains, how can you impose capital gains tax on it? And that has been basically the ruling of the Bombay High Court. It says, right, basically the shares which are given as a gift will start escaping or will not be imposed with capital gains tax. Now this is basically the gist of the article which is provided here. Names of the companies are given. How many shares are there? They are given. It is of no use for civil services examination. Ignore all of it. Now before I go to the last article, before I take up the last article, let's say certain shares have been gifted by your relative, which means it will not attract a tax. But what if, right, this particular shares will bring returns to you? If the shares will get returns to you, are those taxable? And if you are, let's say, younger than 18 years, then how those particular taxes will be imposed? If you know the answer, please do let me know in the comment section. Now the last article, before that, a previous year question, under which of the following circumstances may capital gains arise? When there is an increase in the sales of the product, capital gains. So in case of sales of the product, no, it is not capital gains. Earlier it was a sales tax. Now it has been brought under the ambit of GST. So first one is wrong. When there is a natural increase in the value of the property owned, of course yes. If you own a property and sell the property, over a period of time the value of the property would have appreciated. So they will use a methodology to calculate by how much percentage, by how much value, the value of the property has appreciated, and on the appreciation, government will impose a capital gains tax. Second statement is correct. Third statement, when you purchase a painting, there is a growth in its value due to an increase in its popularity. Of course, yes. Now, many will simply say, sir, but it is about painting. My dear, please understand, capital gains tax is applicable for movable assets as well as immovable assets. Doesn't matter. For movable assets as well as immovable assets, whichever has been brought under the capital gains tax regime by the government, it will be applicable. Is painting covered under this? Yes. Shares? Yes. Property? Yes. Right? So third statement is also correct. Second statement is also correct. Right option for the question will be 2 and 3 only. Now going to the last article for today, just an update. Earlier, if you remember, we had a discussion regarding the 45-day payment rule in the context of MSMEs. That is in a nutshell. Just I am revising it for you now. Under the MSME Act, there is one section which has been inserted by the government, Section 43. Section 43B(H). According to this provision, if a company has purchased something from, let's say, MSME, and it has not made a payment in 45 days. I repeat, if the company has purchased something and has not made the payment in 45 days, then in such case, certain tax deductions will not be allowed to be claimed by the company in that year. They can only claim in the next year. That is basically the impact of section 43BH. Now the concern regarding that was raised by many of the stakeholders. Many of the stakeholders argued that if this is implemented, then the companies would simply bypass these registered MSMEs and start purchasing from unregistered MSMEs. Is it okay? I'll repeat it. Many of the companies will bypass, they will not purchase from these registered MSMEs. Why? If they purchase, they will have to stick to the 45-day rule, and they want flexibility. They want more relaxation. And the concern was they will not purchase from registered, they will purchase from unregistered. In fact, it has already started happening that way. Now, challenging this, many of them went to Supreme Court of India. And Supreme Court of India has adjourned the MSME plea request. Basically, the authority which approached Supreme Court of India has withdrawn this particular plea. That is an update regarding the article here. Again, same related to the MSME Act, the 45-day rule, section 43BH. So this is basically the update. Okay, so these are the various articles as well as the questions related to articles for this particular week. If you like this initiative, hit the like button. Provide your valuable comments in the section below. And if you yet to subscribe to our YouTube channel, kindly do it now. Thank you. Have a great day.